The index went up a lot in the past few weeks, but now we see signs of exhaustion. This is a sign of profit-taking which could trigger a sharper correction to lower levels, so brace yourselves as the index is poised to drop to lower levels. The question is, how low could it get? Well, by the end of this video, you'll learn the most important key points to watch from here on the S&P in order to prepare yourself to whatever happens next. Welcome to the Finance Hydra channel. My name is Nathan. Let's analyze our dear S&P index right now, starting with the 1 hour chart. In the short term, as far as I know, the S&P is just doing a harmless pullback to the 21 EMA, and right now it is trying to react. It is really trying to react. So as far as I know, it is still a crystal clear bull trend made of higher highs, higher lows, while the 21 EMA is working as a support area. So right now, despite this drop, despite this correction, the S&P is not in a bear trend in the 1 hour chart in the short term. And as long as we stay above this 21 EMA, the trend is not going to reverse. Now, in the daily chart, the situation looks a little bit more dramatic because we are doing a quite ugly candlestick pattern over here, right? This might be a top sign, but the S&P has yet to retest the next technical resistance around 42.18, which is not a random resistance. This key point was a previous gap over here on the index, and as you guys know, gaps work as magnets for the price. So, okay, we have yet to fill this gap, and right now we are dropping, so what? Well, the S&P is in a no man's land right now. It is between this resistance and between this support level, which was a previous resistance level on the index 1, 2, 3 times since December 2022. So yes, this key point, which was a previous top, is supposed to work as a support level following the principle of polarity in technical analysis, which says that previous top levels are going to work as future support levels and vice versa, alright? So, okay, 4100 is our key support level, and we are trying to do a top sign over here. Well, honestly speaking, personally speaking, I wouldn't take this top sign too seriously because the S&P did a quite similar top sign over here a couple of days ago, right? A few days ago it did this top sign, but and in the end it was just a pullback to the previous support level, which was a previous resistance level on the S&P. Again, principle of polarity, this red line over here, previous top level 1, 2, 3, 4 times, it did work as a support level while it was doing this top sign on the index. So it is doing a very, very similar pattern, so I wouldn't be surprised if we see the S&P retesting the 4100 just to bouncing back to higher levels, because it is still a bull trend. Now, since the key point is 4100, you might be asking, okay Nathan, but what if we actually lose the 4100? What could possibly happen if we actually correct to lower levels? Well, then I see the S&P retesting the 21 EMA in the daily chart, and this is it. This is as far as I can go, because as long as we see this higher highs, higher lows in the daily chart, it is not a bear trend. It is just a bull trend. If the index does a crystal clear lower high, lower low, then okay, maybe the trend is going to reverse in the mid, even in the long term, but as long as we don't see that, I can't assume things. Remember, trading is reactive. It is not predictive. True trading is reactive. It is not predictive. And of course, if you want to join a family of true traders that can actually beat this market, join the top 5% family. We are literally the top 5% of traders that can actually make money while beating this market. Public track record, by the way. Check my website. The link is in the description of this video. Now, if we take a look at the weekly chart, in the weekly chart, we just triggered a fantastic, phenomenal bullish structure, bullish reversal structure, because the S&P triggered a bullish pivot point. Now, the 4100 was not only a resistance level seen in the daily chart over here, but it was at the same time the pivot point of this huge pattern in the weekly chart over here. 4100 since the beginning was our key point, was our most important key point. Right now we are triggering this pivot point, the volume is starting to increase again, Therefore, we might expect more upside left, at least in the long term. Maybe if SPY corrects in the short mid term over here, it is not going to ruin this bullish bias, all right? Because we officially broke this descending channel, we officially triggered a pivot point for the first time since the bear market started in January 2022. So yes, the S&P is still clearly bullish, and there is no top sign in the weekly chart on it yet. Now, if we see a very strong, very sharp, very problematic sign that, okay, the index is going to crash to lower levels again, in this scenario, we could lose the 38.2% Fibonacci's retracement and seek the 61.8% retracement in the monthly chart around 3,200. But as long as we don't see that happening, the bullish bias will just persist. Remember Dow theory, tenet number 5, I guess, I don't remember. Correct me if I'm wrong, just leave a comment if I'm wrong. I always read the comments, by the way. Leave a comment over here if you agree or not with me. But Dow theory, tenet number 5, trends persist until a crystal clear reversal occurs. Right now, we don't see a crystal clear reversal occurring, so it is still a bull trend. And of course, if you're still watching me for almost 7 minutes right now, it is about time for you to subscribe to this channel, because you would not be wasting your time if you didn't find this video at least entertaining. Okay, so probably you are liking this content, so leave your like button, click on the subscribe, join our channel. Now, I have a very quick message, and I'm gonna say this only once. If you like trading options and if you join the top 5% subscribing to any of my newsletters by February 9, you will receive at no additional cost for 2 weeks on Fridays our weekly options trading newsletter containing valuable trading tips and strategies. When I launch the service by the end of this month, there will be a very special discount waiting for you. You have until February 9. All right, so these are the most important key points to watch right now on the S&P. As long as we stay between this resistance and this support level, in my humble opinion, as a retail trader like everybody else over here, the index will remain in a no man's land. All right, so let's wait for a breakout. Any meaningful bullish reaction might be just an opportunity to buy at a discounted price with a good risk-reward ratio. All right, so I'm gonna keep you guys updated on this. So remember to subscribe. Thank you very much for your audience. Stay safe. See you guys next week.